So, thank you all. Welcome to the first of our 2026 webinars hosted and run on Practice Autopilot Xero to Hero. Webinar 1 is all about building the foundations of your financial success for 2026 and beyond. I'm going to start with the worst business advice that I was ever given. And I want to introduce you to bookkeeping, but specifically for healthcare businesses, because there is a difference just between bookkeeping and bookkeeping for healthcare businesses. Connecting your bank accounts so we're balancing our books, so we know that what's coming in and what's going out. Dashboards, which is your weekly financial health check, so you know exactly where you are with your businesses on a weekly, monthly basis. And stay one step ahead of the taxman, the dreaded taxman, with a bit of ChatGPT thrown in, which I know we all love. So this is what I want to unpack in webinar 1 before we move on to webinar 2. So you may be wondering, look, why do I need accounting software? Look, the situation is that if you're on this webinar, there's a very good chance that you are running a healthcare business. And it doesn't matter whether it's a small domiciliary business or whether it's a small clinic or even a large multidisciplinary clinic. You are running a business regardless. If you're going and you're receiving funds for services, healthcare services, you are running a business. If you're running a business, you've got to have the software going forward to be able to manage that business. And the purpose of a business, and I don't want to sound patronizing here, but the purpose of a business is the supply of either products or services, and in many of our cases it's services for profit. And then whenever you make profit in the UK, there's a tax burden on your profit. And then whatever's left, once you've paid all of your liabilities and your tax burden, it belongs to you. And some of you may be happy with the level that you're receiving your income, but some of us may be thinking, where does all the money go? And I know that I've been there myself, and a lot of what I present, it comes from my own personal experience. What I want to focus on in the building the foundations for your practice going forward is really getting on top of your tax burden and understanding where your money goes, because business should be simple. You provide a service, you get paid for it, you pay your taxes, the rest should be yours. But it really isn't that simple. And all of you that are running businesses know that it's not that simple. So I want to unpack that a little bit. So the worst advice I was ever given was to outsource my bookkeeping. Now, I've been running healthcare businesses for over 30 years, and I'm ashamed to say that I didn't start doing my own bookkeeping until 2021, so it's not that long ago. And I was always told that the best thing that I could do is to stick to what we were good at, which was treating patients, and then outsource everything else. And if any of you, like myself, read business books, listen to business podcasts, you will hear it time and time again that you should stick to what you're good at and you should outsource the rest. And I agree with the majority of that. But when it comes to your finances, there's no better person than you. And the reason why I say that is because you are not a big company. There isn't anybody that's on this webinar that is a big company. We do not have financial departments to look after things. We need to be on top of our accounting at all times. And the only way that you can stay on top of your accounting is to be the bookkeeper. And the reason for that was, over those 30 years of owning and managing healthcare businesses, it was only in the last 5 years that I truly understand where I was financially. And to be perfectly honest with you, when I was just taking over the finance of that business, and I got in tune with bookkeeping, only then did I realize quite how underperforming that we were and where we were getting into difficulties with tax. So this was the worst advice. And if you're going to take anything on in your business, I would suggest that you take on the bookkeeping. Now, you might wonder why Xero. This webinar is called Xero to Hero. And why I called it Xero to Hero was not because it rhymed, though it sounds good. The reason why I called it Xero to Hero was because I know Xero financial software. I've used a lot of financial software and I use Xero. Okay, so it's my own personal experiences. And why would I come onto a webinar and speak to you if I didn't have experience of something that I could impart to you? But also, the hero aspect of it is that I want you to come out of it to be that financial superhero. I really do. But that's not to discount all the other packages of software that are out there. So there's many people on this webinar right now that I'm speaking to, and there'll be many more that are watching on the replay, and they'll say, but I use QuickBooks, I use Sage or Free Agent or ClearBooks or a whole plethora of other softwares that are out there. So whether you're on Xero or whether you're not on Xero, it doesn't really matter, because of the principles that you're going to take from this webinar, you can apply to any software package. That being said, okay, you've got to be able to implement them. And this is what this is all about. We have both free courses provided by software companies, and we also have a course that runs hand in hand with the lessons that I'm going to teach you on here. Simplifying the setup for healthcare businesses. Now, what you've got to understand, it doesn't matter what software you're using, okay? All accounting software is broad spectrum. It covers anything. It doesn't matter whether you're a podiatrist, a foot health practitioner, a dentist, a physiotherapist, a bricklayer, an accountant, a barrister, and the list goes on. It is a canvas for which you have to adapt for your industry. If you don't adapt it for your industry, you won't understand it because it won't be relevant. The only people that will understand it are accountancy people, which then means that you can't own your bookkeeping software because you won't understand it. Because you don't understand it, you outsource it. And because you'll outsource it, you will always be looking at your business in the rear view mirror. You will end up going to your accountant at the end of your accountancy period, and your accountant will hand you a printout and say, you owe X, Y, and Z in tax. And you'll say, really? I didn't know whether I earned that much. And you have all these questions about your business, and there's nothing that you can do about it at that stage, because I'm afraid to say that is over 9 months old. So one of the reasons why I want you to get on board with this is because by the time your accountant tells you that you owe X amount of tax, you've got no way of changing it, because you're always looking at your business in the rearview mirror. So this is why I want you to get on board with Xero or any other accounting software, and how you need to adapt it for your healthcare business. So when we simplify in the setup, we're going to look at 3 things. There's only 3 things that you need to change to make it relevant to your business. And that is your financial settings, your chart of accounts, and your bank accounts. That's all you need to change in any software program, regardless of what you're using. But we're going to use Xero as an example. So I'm going to just start with the financial settings. So quite simply, all businesses have a cycle, okay? Now, if you're in business and you're a sole trader, the cycle's predetermined for you, okay? It runs from the 6th of April to the 5th of April the next year. So when you go into the financial settings of any accounting software and it asks you to set your year end, it will choose your year end automatically at the 31st of March. So if you're a sole trader, it already pre-selects the 31st of March. That's fine. Leave it be. If you're a sole trader, you don't need to do anything else. It's already done it for you. However, if you're a limited company, and there are many limited companies here, then your accountancy dates will change. It won't always be the 31st of March because this is set for a sole trader. Where you are here, you will find that you need to put in your accounting period, and your accounting period will differ from the 31st of March unless your accountant has synced it. But just contact your accountant and say, when is my accounting period? What do I put into my accounting software? And all you need to do is enter the date, press save, and it's perfect, because every financial report that you run from then on in will be accurate. Those that are on here because they've seen my posts about making tax digital that's coming into April 2026 this year, it will work, it will be accurate. And the most important thing from my bitter experience is that if you get your accounting periods right from day one, you will be able to save for your taxes. You'll be able to understand where you are financially, because tax is very complicated. And it's something that I think that causes businesses many problems. And the reason that I put this slide up, and this is a quote, my quote from bitter experience, that I believe that retrospective tax laws have led to the failure of many small UK businesses. Or I would change that to, I believe that retrospective tax laws have led to many people giving up on their small businesses. And I would say that both of those statements are true. And the reason for that is, unless you have had training in finances, unless you've run businesses before, unless you understand accountancy, which most of us don't, it's so difficult to understand taxation, and you are always in the pocket of the HMRC taxman. So I just want to unpack that a little bit. UK tax is retrospective, and because it's retrospective, it catches many people out. And because they get into deficit, and you will always be in deficit from the minute that you start trading, the deficit compounds on itself and it becomes a real problem for businesses, to the point whereby they get so bogged down by it, it's either easier to get a job in Tesco's or go and work for somebody else. And I don't want you to do that. I want you to keep pushing your practices forward, because it's a simple thing to get your head round once you've got your head around it. Stupid thing to say, but I want to explain that. I've chosen the last tax period. So I would think that most of you that are on this webinar are either running a business or thinking of opening a business, or some of you might be thinking of exiting a business, but you're somewhere on the business journey. So I've chosen the last tax period because many of you will have a tax bill coming on the 31st of January, like me this year. There will be a brown envelope. If you've not already had it, you will be paying, your last day of paying tax for this year is the 31st of January. But this is the thing that some of you, I know that you know it, so please don't think that I'm patronizing, but it's easy to forget. It's easy to forget year on year that you're actually being taxed on the previous trading period. So if you've had a brown envelope telling you that you've got to pay your tax by the 31st of January 26, they are charging you from the 6th of April 24 to the 5th of April 25. Now, let's just assume that in that tax period, you earned £50,000. So if you earned £50,000 from the 6th of April 24 until the 5th of April 25, you will receive a tax bill of £9,732. Fine. Okay, that's the tax on the period that you'll pay on the 31st of January this year. However, you actually owe the taxman £17,639 by that period, because they are billing you 9 months and 26 days in arrears. And because they are billing you 9 months and 26 days in arrears, you've had another 9 months and 26 days trading. Now, assuming that you're trading at the same level of £50,000, you will have accrued, another £7,907 of taxes by the time you get to the end of this month, 2026. So you are always in deficit to the taxman, always, from the minute you start trading until the minute you close your business, and then 9 months and 26 days after you close your business, you owe the taxman. So just bear that in mind, that your £9,732 tax bill is actually £17,639. And it's a very sobering thought. And it's the reason why I have that slide that says, I believe retrospective taxes have led to the failure of many small businesses because people don't understand it. But it's not a problem if you know what you're doing, which is the reason why we're on this webinar and we're setting up the foundations for our financial future, which is going to make 2026 the best year ever. And it's the reason why I'm here. Because if you understand it, it's not a problem. So I'm going to go over it again. If you're a sole trader, you are trading for 12 months, 6th of April, 5th of April, and then you have a 9-month and 26-day lag. So you are always 9 months and 26 days of your trading history owing to the taxman. If you are a limited company, however, poor old limited companies like myself, okay, we've got feet in both camps because most limited companies will take some of their revenue as PAYE, and most of their revenue they'll take as dividends. So if you're running a limited company, this is where it really becomes complicated because your tax year doesn't sync, or probably doesn't sync, with the rest of it. So my business tax year is the 1st of August 24 to the 31st of July. This is my last running year. So in a limited company, we get 9 months and 1 day, okay, deficit. So from the period of the 1st of August to the 31st of July, on the 1st of May this year, I will get my corporation tax. But I take some of my income as PAYE, which most limited companies do. So then I fall under the PAYE scheme as well. So all of a sudden, I've got brown envelopes coming through my door like it's confetti. I've got brown envelopes coming for the 31st of July, brown envelopes coming on the 1st of May. And let's not forget that we also got our payment on account that comes into it as well. Okay, so being on top of your taxes is crucial because all of a sudden you just find yourself swamped with where is all this coming from. So you always have to remember, if there's no other rule, you always remember you are 9 months plus 26 days in deficit to the taxman until you close your business. And then another 9 months and 26 days later, can you free yourself of the taxman? So you're always in arrears. You're always going to pay the man. So just get that under your belt because you cannot run a successful business if you cannot pay your taxes. Anyway, here's for a funny slide. The next bit, if you are serious about getting on top of your accounting, this is the most important step. And this is why I've run a course on it. Okay, if you do this properly, then the rest of it is just easy from. So this we've got to pay attention to. With your chart of accounts, everything that you earn, spend, acquire, accrue, any of these things now has a sub account, which is where it all starts to get a bit of a nightmare. So in your chart of accounts, you've got revenue, expenses, liabilities, assets, and equity. Okay, so I'm going to take you through them one by one. So I'm going to look at revenue because this is what we're all interested in, the money that's coming in the bank. Now, when you go into Xero and you click on your revenue chart of accounts, it only brings you up 3 options, which is great. It brings you sales, it brings you other revenue, and it brings you interest revenue. So it's saying that we get revenue from 3 places, which is fine. Okay, and you can keep it like that. However, what I do want you to change is this. If you look under the first code of number 200 sales, you'll notice I put a little bit of a magnifying glass over the 20% VAT on income. The beauty about being in healthcare is that we don't pay VAT. I know there are discrepancies if there are FHPs in the room. Nothing's happened yet with the government and hopefully nothing will, but I understand that. But for now, we're not paying VAT, so we can chill for a minute. I'll do another webinar if we can't chill, right? But I need you to make this an exempt income. So what you would do is you would go into your chart of accounts. Again, I've got a course on it, so don't worry. I'll show you how to do it. And I want you to change that to exempt income because it is exempt from VAT. and I think it will probably always stay exempt from VAT. I've also changed the word sales to services, because what we provide is a service, okay? And services are exempt. So you put it down as services. If you come down to the next one down that says other revenue, now some of you may have clinics and you may rent space, which is great, and you get the rent that comes in from that. And this would be other revenue. Some people might run courses. That would be other revenue that comes in. Okay, so these are other revenue streams that come in over and above what you're doing by treating patients. And then what I do there is I just change the description and I put on here income generated from commercial lettings, non-clinical services, etc., like tutoring or courses and so forth. The third one down, interest income, can stay exactly the same. This tends to be interest that you get if you've got shares or if you've got money coming in because you're positive in the bank, etc. That can stay the same. And there is an optional one, which I don't think that many of us, and I certainly don't have it, which is if you sell more than £80,000 worth of healthcare products, creams, lotions, potions, etc., you may be subject to VAT. And because you might be subject to VAT, it is a very good thing to do to create yourself a fourth category called product sales, okay, which is subject to that, because you don't want to mix your product sales and your services together, because if you mix your product sales and your service together and you go over the VAT threshold, there's a very good chance you'll start paying VAT on your services that you shouldn't be paying on. So if you feel that you sell a lot of products, I certainly don't sell £80,000 worth of products in any one year, but if you were in that position, that's why I put it as an optional, separate it out, because you do not want to be giving the tax man the VAT on your services because you've combined the two. We're going to move forward to expenses. Now you can see on the left-hand side, oh my God, there must be 50 different types of expenses. Now this, I really want you to pay attention to, okay? Because there's only 5, and they're really important when you reconcile your accounts. So the first one that will come up is the cost of goods sold. Leave it be. If you're in that kind of £80,000 worth of products that they get sold, leave it be, because that's where you'll put those products, because you'll be able to reclaim the VAT that you spent on them. Most of us, if not all of us on this call, are not selling £80,000 worth of products, so leave it be. However, the next ones down are just changes in terminology that really make sense to you when you're reconciling your payments, and they are. The first one that comes down is direct expenses. And I change it, as you can see under the magnifying glass, to direct revenue expense. And you'll find that the next one says general expenses, which I've changed to general running expenses. And there is a difference, because when you want to analyze your business, which you'll be doing in webinar 2, you want to know what you spend to treat the patients and what you've got to pay to be able to run your business, okay? And it's really important if you really want to have a financial control of your business. So a direct revenue expense would be anything that you have to buy to treat your patients. So this could be your blades, it could be your creams, it could be your lotions, your potions, whatever it might be. It's a revenue expense. It's a consumable revenue expense, which is really important to understand. It is the things that we use to treat our patients. That is a revenue expense. A running expense is what it costs you to run your practice. So you might want a bunch of flowers in your practice every week, as my wife does. So that is a running expense of our practice. You may pay the window cleaner. You should pay the window cleaner because he's got to earn a living as well. And he's probably on zero. But you've got to pay these running costs, cleaning, everything it costs to run the business, but you don't use your bleach on your patients and you don't give your patients your flowers. You get the difference, okay? There is a difference in the cost because it'll be able to drill down in the numbers. So if you just change direct expense to revenue expense and general expense to running expense, you'll be able to figure it out in your mind. The fourth one down, in Xero, it says lighting, heating, and gas, I think, or it doesn't matter. Change it to utilities. We all know what utilities is. So when it's coming through, it's a utility bill. It might just be a little bit of me being me about it, but just change it to utility. It's a utility expense because utility costs have gone through the earth. And now if somebody's saying, oh, what did you spend on your utilities in 2002? And what are you spending on your utilities in 2026? You can go in and check your utility expenses, really easy to find. Okay, just something that I think works really well. And lastly, it comes under cleaning in Xero, and I change it to hygiene and waste because we spend a lot of money on hygiene and waste. So if you have people coming in to clean or cleaning expenses, but really if you have like clinical waste cost that goes with your business, because if somebody wants to come in and they're looking to buy your business, for instance, they want to know what you spend on clinical waste, you'll be able to find it that easy. And that's all you need to change in the expenses. So this is what it is. Now, I know this is getting quite heavy, and I apologize. I will try and lighten it up a little bit, but accountancy is heavy, it's boring. But if you get it right, there is a light at the end of the tunnel, and that's what I'm heading for, the light at the end of the tunnel. You'll be pleased to know that the next three get a little bit easier. Assets are what you own. It's the things that you own in the business. You don't really need to change anything other than one thing. You'll see that I've circled office equipment. So this might be your chairs, your tables, the things that you use to furnish your clinic, that's office equipment. And computer expenses, obviously all of the computer technology that you have around the place is a computer expense. But the biggie really, when you come right down the list, down to number 764, it's called plant and machinery. Now, I don't know what kind of patients you're treating, but my patients don't need plant and machinery. They're not that bad. They need a drill and various other things. So I've changed that to clinical equipment. It still falls under a fixed asset, and it covers things like drills and, I don't know, shockwave machines and Swift machines and all the rest of it. But they're pretty expensive things. And if somebody's going to come and look at the value of your business and put a value, an asset value on your business, these are big things. So change it to clinical equipment, because clinical equipment makes sense to you and makes sense to healthcare. So you know where you are with that. Okay. Then we're going to move forward to liabilities. Liabilities are stuff that you owe to others. You don't need to change anything here. I just wanted to make you aware of certain liabilities: accounts payable, wages payable, PAYE, pensions, student loans. What is quite important in this section is that you put any hire purchase loan agreements in there. So lots of us buy clinical equipment on loan agreements. So it's really important what column that you put it in. So hire purchase goes into those loan agreements there. It's really important. VAT I've circled because most of us are not going to be eligible for VAT, but it's there and it would be a liability if you are. And lastly, if you're a limited company, it's the provision for corporation tax because you owe the tax man. And then finally, equity. And the only thing that you need to look at in equity, you don't need to change it, but it's a bit of a weird one. When owners are drawing or owner of drawings, it's a weird thing. But basically, if you're a sole trader and you take money out of your business, that's where it goes. Okay. But it just shows you've got equity in the business. Okay. So it's under the right column. So again, that is all covered under our course. I am slowly getting to the end of it, but I want to just talk about your bank accounts, because your bank accounts are the lifeblood of your business. Okay, you should really only have two bank accounts if you're running a small business, as we all are, and one should be a current account and one should be a savings account. Your current account should have the money coming in from your revenue, and the expenses going out should be in your current account, and your savings account should have all the money that you need to retain, whether it's going to be your profits that you're going to take, whether it's going to be your savings for your tax, etc. And it should all balance. Okay, it's got to balance. Everything that goes in and out has to balance. That's what your accountant is looking for. So really, two bank accounts. You can have more than two. You can have as many as you like. I guess really complicated, because ultimately between all the bank accounts you've got to balance everything. So one going in, and so one going in, one going out, and one to save for the stuff that you've got to pay out, your liabilities, if you like, is the best way to run your businesses. So it's quite simple. All you do in your accounting software is you click on accounts, you click on bank accounts, and you go to add a bank account. It brings up every bank account you can ever imagine. And you click on that and follow the links, and it will bring in your bank accounts. And it brings in your bank account statements as you see it on your online banking and as you see it in your statements, etc. And the good thing about that is that you are able to reconcile it. Now, going back to why I chose Xero, okay, not discrediting any other software company, so don't have a go at me if you use something else, because I'm sure they all do the same. I just find this brilliant. And this is long before the whole sort of AI stuff that came in. It just makes your reconciliation really easy. So reconciliation is quite simply that if it appears in your bank account, you've got to have something that offsets against it, okay? Everything has to balance all the way down. So the good thing about Xero and a lot of other accounting software is that if you start using it regularly, and you don't have to use it for that long, maybe once or twice, it's that good, and it starts to see the same thing, it'll start recognizing it and it'll ask you, does this match? Is that okay? And you can start going through these systematically and going, yeah, no, yeah, whatever it might be. So I've just shown my clinics, okay, I've just taken a screenshot of what my reconciliation looks like. And on the right-hand side here, you can see, look, there's British Gas, and it recognizes it as British Gas because I paid them before, and it recognizes it as a utility bill. Fantastic. There's a Square payment that comes in because I use Square in my clinic to take payments. So I know, so it's gone under sales. So I know that's a sale. Now you'll notice that I haven't split out my products from my services because I'm not VAT registered. So it's fine that it goes into sales. And then I paid myself some money. My God, I paid myself 500 quid. Don't tell my wife. And then that's gone under director's remuneration. Okay, so that puts it in the right box. And then clinic apps. I use clinic apps to send out SMS messages to my patients and my recalls and so forth. And if you notice, I put that under advertising and marketing because you have to be smart. What do I use clinic apps for? Is it IT? No, I'm using it to bring patients into me. That's a form of marketing. I want to know my marketing spend. So it goes under marketing. And this is why segmenting out your chart of accounts is really important. So it's not something you want to do really flippantly when you first started. Think about it when you first do them. Okay, and then you'll get fast with it because it'll keep on bringing them in. And then my last one, Stripe payments, I put that in there. So Stripe payments is where people have gone onto my Clinico and they paid for their payments in advance and it's gone through Stripe. So again, it's gone into sales. So everything is categorized really neatly there for me and it's recognized them. And I just did a little bit of a reconciliation in real time. And you just see this video. It took me 4 minutes and 28 seconds. And you can see it. I'm going through and I'm seeing them and I'm checking them and I'm checking them and I'm checking them as we go through and everything seems to be right. And then somewhere along the line here, I think it pulls up something that I've never seen before. I'll let it get to there. So this is me reconciling in real time. And oh, there we go. eBay. And what did I buy on eBay? I bought something from the eBay computer shop. So then I'm just going to tap in here that is the eBay computer shop. And it's computer. So what do I put it under? It's a computer equipment, so it files it under assets for me. So I've now got an asset that's come through. There's some petrol that's coming through. There's some IT stuff. Dividends, it goes on. We took our staff out, so we went for a meal. It took an Uber, all these types of things. There's lots of stuff going through here. Autopilot, that fantastic autopilot. And then it just carries on. There's my rates that are going through, more Square payments, etc., etc., etc. Just keep on going through. And within 4 minutes and 28 seconds, I'd reconciled my accounts. 4 minutes and 28 seconds. That's all it took me. That's wild. To do my bookkeeping for the week. Done. Finished. That quick. And the reason why it's that quick is because I've done it time and time again. It doesn't take that long until it recognizes the majority of those payments that went through, I pay every month. I have done my bookkeeping. I am my own bookkeeper, and that's how quick and clever it can be. And that's why I want you to come on board with it. Because it will give you financial clarity, because I can go into my dashboards then, and if somebody hasn't gone into Clinico recently, you'll notice that they've changed the dashboard. I love the new dashboard layout. I thought the old one was a bit boring. The new dashboard layout shows you a financial snapshot of your business, and you can actually change the things around. So I've changed it around. However, Xero does not show me my tax liability. And a lot of you will have come on to here because you want to know where you are with your tax liabilities. So I just want to show you a little tweak that I have done before Making Tax Digital comes in April, so that you know your tax liabilities, because this is something that I want you to really get on board with. So I've made a little tweak. When you have all your reconciliations in Xero, okay, you're able to, with the touch of a button, put up a profit and loss statement. And profit and loss statements historically are generally looked at by your accountant at the end of your tax period, 9 months after you've done the work, and they go, "Oh, you owe £10,000 in tax. I hope you've saved for it." Okay, we're going to get away from that. We're not going to be in that financial uncertainty. That's why we're all on this call. What I want you to know is where you are on a monthly basis. Okay, so you can put that money away, so that you are ahead of the taxman. We are not being in deficit to the taxman anymore. We're going to be ahead of them. So what I want Xero to do, which Xero doesn't do, is to give me a nice square box here that says, and your tax is this. Okay, and it doesn't do it at the moment. But this is where I commend HMRC for Making Tax Digital in April 2026, because they are moving closer to getting away from that 12 months. And they're making it quarterly. Now, you don't pay quarterly, but you do understand where you are quarterly, very similar to if you were submitting VAT. And it gives people financial clarity. And it is one of the very few times that I would ever commend HMRC in being forward thinking, because I believe that they are starting to see that businesses are getting into the proverbial, because of their tax liabilities, and shutting down, and that they need people to know where they are. But it's not April 2026 yet, so I can't give you what they're doing in Xero. So I'm going to give you a workaround until April 2026, which is, if you download your P&L, which is easy to do, profit and loss, and there's a prompt there, which I'll send you, so don't need to write it down, and go into ChatGPT, which I'm sure all of you have got an account with, and tap that prompt in and upload your P&L for the month, it will give you a basic tax breakdown. So you will be able to see, and this is for sole traders, that at the end of that period that I put in there, that you need to put away £1,470 in tax. So if you did this every month, just download your P&L, put the prompt into ChatGPT and uploaded your monthly profit and loss, it will give you that amount that you need to put aside. I've got exactly the same for a limited company. My prompt changes because the way the tax is calculated for limited companies is different. You can upload your P&L, and as you can see in the screen where it's running, now it's giving me my corporation tax breakdown and my personal tax breakdown and everything that you need, so that you can now put the money aside, so that you're always ahead of the taxman. So on a monthly by monthly basis, you print off your profit and loss. For now, you run this through a prompt GPT, and you know exactly where you are with the taxman every single time. So my sort of heads up to HMRC is, well done, HMRC, for understanding that we get into the proverbial as businesses when we are running nearly 21 months behind our tax liability, which is massive. Okay. And they've seen this. They've obviously seen many businesses fall by the wayside with tax, and they're now bringing that up to speed. So that will come into these accountancy packages. I just want to make you aware of what's coming into webinar 2, which is in 2 weeks' time. So we've got the foundations of our financial situation for 2026. And now we want to measure it, because if you can measure it, you can manage it. If you really want to get ahead with your business and know exactly where you're going at all times. So what we're going to be looking at is why I believe that most businesses fail due to the lack of financial control, which I don't want for you. How to make short-term decisions based on your profit and loss report. So your profit and loss report you can bring up at any time, and you can make those short-term decisions. Should I buy this? Should I employ them? Making long-term decisions based on your management account. Where are you in the long term with your business? What assets? What is your business worth if you need to sell your business? If you wanted to buy a property, could you afford it? Is there enough assets? So making long-term decisions and all the stuff that goes with that. And the big hero is that anybody that runs a business has to have an exit strategy. Okay. Now, many businesses, you will just close the door, turn the sign, I'm closed, and walk away from it. And it generally costs you to do it. I want you to be in such a strong financial position as healthcare practitioners that you can do the hero exit, hence the name Xero to Hero. I want you to start here and exit there as a hero, so that you will have a business somebody will want to buy because you're all over your finances and you're running a very profitable private practice.